Well, dear colleagues, as you may know, today the board of the central bank decided to raise the refinancing rate by 25 base points, setting it at 9.5. Today, Deputy Governor of the central bank, Nerses Yeritsyan, will conduct the press conference. Traditionally, we will read out the press release first, and then we'll answer your questions with pleasure. Good afternoon. Thank you for accepting our invitation. At its session of August 2, 2022, the Board of the Central Bank decided to raise the refinancing rate by 25 base points, setting it at 9.5%. In June 2022, the 12-month inflation continued to rise, amounting to 10.3%. 12-month natural inflation also increased, amounting to 9.4%. In Q2, the global value chain disruptions stayed on. An economic activity slowdown was observed in the main partner countries of the Republic of Armenia. A slowing of inflationary pressures were noticed in international commodity markets, but the prices continue to remain at historical highs. Central banks of developed countries continue to make more stringent their fiscal terms. This will contribute to gradual constraining of the international inflationary pressures. So the inflationary pressure on the external inflationary pressure on the Armenian economy will stay in play, will be eased, but will still remain at a certain level. In 2022 Q2, economic activity was in the Republic of Armenia higher than expected, especially in the services sector. Positive developments were recorded also in industry and exports. High economic growth was superseded in the demand side, determined by international visitors and great influx of remittances from the Russian Federation. The high demand results in expanding the overall inflationary expectations, and the valuation of the Armenian dram neutralizes the increase of the inflation. In this situation, the board decided and considered it expedient to increase the policy rate to neutralize any risk of de-anchoring of inflationary expectations. Under this fiscal policy scenario, the 12-month inflation will gradually decrease, and in the midterm horizon will get nearer to the 4% indicator. The board thinks that the uncertainty about macroeconomic prospects is still in place, but there are mostly balanced risks of the inflation straying off the orbit that is charted. The board will pursue the price stability goal. Thank you for your attention. ATV. I'm representing the AB News website, Asnif Karapetyan. You mentioned that 10.3% is the inflation, and it has been constrained through on behalf of the valuation of the Armenian dram. Do you have estimates what would the inflation have been had the dram not valued so much? And I'll ask another question as a follow-up. Thank you for the question. Yes, we have estimates like that. This impact is not direct. We have arrived at it through the analysis. It would have at least been higher by several base points. In any case, these are just estimates depending on the imported goods and forex impacts. If we look at June, over June 10.3, it would have been lower slightly, but it would have been about 9. Oh, it's just the opposite, sorry. It would have been 1 base point or slightly more higher just over 1 month. And in a longer stretch of time, of course, naturally, this would have been more salient, more expressed, about 2 up to 2 percentage base points. In order to imagine how this impact takes place, it's not the forex per se that reduces the prices. We have the external demand shock. Tourists arrive in the country, exports grow rapidly, 50-70 percentage increase in the exports that we have. The demand over our goods and services is high. People bring in foreign currency for this consumption. Since the demand is higher than the supply, the rate is adjusted and the consumption decreases, so do the prices. Do you have any estimates as to what would be the inflation annually? Yes, this is the gist of our work. Over our previous estimate as of end of month still stays put, 8.5% that is. Nevertheless, depending on developments, we are reporting to you the results of our monitoring. We do our estimates 4 times a month. In September, we will publish the new estimates, and there would be new indicators that we will definitely share with you. Nevertheless, the essence of our policy is to bring back the inflation to the target within foreseeable period, like I just read out in our press release. With your permission, let me add one item. Mr. Yeritsyan, on the previous question, when we were talking about the valuation of the foreign exchange and the neutralizing effect on the inflation, there's one important thing that Mr. Avetisian outlined, the overall impact on the general consumption index. If we look at the first necessity goods and food, at the event of 10.3% inflation, the inflation of those types of goods is essentially higher. The valuation essentially constricted more, neutralized more the inflation over these types of goods, which is of great significance for people with low income. And one must notice that there are various impacts on these types of goods. Food in particular, if you look at the inflation there, it is higher, 15 to 20% of those goods in the background of 10% of general inflation. ARCA, H2 TV channel. Thank you. In these conditions of the rate, what changes are expected in the lending market? And the second question, it was mentioned that there is uncertainty. By the end of the year, what economic growth does the central bank estimate? Thank you. The rate increase will have a certain impact on the market, definitely, but the trends that we have in the financial market will stay in place. Our decisions have a certain time lag before their impact is effective, but our policy is aiming at containing inflation, and other parameters are ancillary. As for economic growth, we have de facto indicators on the basis of which we made a certain estimate and a decision about the rate. We of course have certain annual estimates. The adjustment will be upwards, that's no doubt, unless there are other surprises from the external world. In our September estimates, we will share with you the specific numbers. De facto, yes. Thank you, Mr. Yeritsyan. In the inflation reports, there is an interesting analysis, comparisons between the international prices of the most essential goods and the local goods, almost for every goods, depending on the specific month, of course, but mostly there is quite a significant spread. the growth of the local prices is significantly lower compared to the increase in the international prices over the same period. Have you attempted at an analysis which part of this damper is ascribed to the valuation of the dram and what part is could be ascribed to the increased competition between the importers? Our estimate is such that mostly it was the impact of the exchange rate. And with your permission about the labor market, there is an interesting observation you've done. The increase in wages this year will be slightly higher than determined by the fundamentals. That is, it will be somewhat higher than the inflation, 10% plus, and subsequently it will go down to the neighborhood of 6 to 7%. Why do you believe this will be the case? And is this still holding true? Why do you think that the increase of wages will be at a higher rate than the increase in productivity? By analyzing the impact of this factor on the inflation, the expenses per one worker are higher than the fundamentals and increases and creates additional inflationary pressures. If it's measurable, could you share the number of it's going to decrease? The question is when. Thank you. When we say the growth is determined by demand and there is warming, the biggest and the most serious indicator of this warming are exactly what you referred to, the faster increase of the expenses per worker and the faster increase of wages compared over the productivity. Of course, this will be constrained when the inflation is constrained. Our biggest argument is that the high inflation in the second round will pressure the increase in the wages. The business expenses will increase otherwise, and this will may raise issues of international competitiveness, which is why we believe that inflation is a vice for all strata of the society, including businesses, importers, including exporters. By constraining inflation, we will be able to resolve the long-term stable economic growth issues and get a real increase of wages determined by entry into new markets, increase in productivity, rather than just the increase in demand, which may lead to competitiveness issues for our businesses. Why do you conclude, or how, to be more precise, do you conclude that the wages increase faster than productivity? These are indicators. We make estimates and we make projections. If you want details, yes, we can share them. There are two facts. Picking up where Mr. Yeritsyan left, your question allows us for an opportunity to tell you what price stability means and why it is important to look at the wages indicator. It's important because when you have no price stability, when the inflationary expectations are on the rise, if you get once high inflation determined by certain factors, everyone starts to assume that the inflation will always be high, and it is reflected in economic decisions. When the employer and the company negotiate wages, they will keep in mind not 4% but 10%. This is an undesirable situation because it increases the expenses of bringing back inflation to track, which is why we think about the stability of wages, stability of prices, which is why Mr. Yeritsyan said that the high level of inflationary expectations is detrimental in the midterm and will have negative consequences for everyone in the economy. Of course, we can calculate the productivity indicator. We know how much the investments and capital increase in the Republic, stock of the capital increase in the Republic. We know how much workforce do we have, and the rest is estimated as the productivity. Since our economic growth increased by a high rate, naturally, productivity is a slower mover than the demand. Therefore, it's not impossible for the productivity to immediately catch up with the demand. Does this mean that in the future the productivity will not get at the level of the demand? Not in the least, but we need to track it. It's very important. If we see that the growth of the wages and the inflation continually deliver surprises upwards, it will be a signal for us that the productivity increase truly has not yet caught up with the demand. If we see the opposite, the growth increases in but the wage increase and the inflation do not give us upward surprises, this means that the growth can be ascribed to genuine productivity. This is one of the indicators that we will be following carefully. If the inflation starts to come back, all of these estimates will be adjusted, may and will be adjusted. It's another issue when there is a demand shock and whatever you sell, the prices increase and the revenue increases for the communities, enterprises. Of course, the consumers, the workers would like to adjust their wages to the level of inflation. This applies to the rest of the world, and this behavior is ubiquitous. We're no exception. That's what we've tried to make an estimate of, turn it into indicators, and to explain what would be the inflationary consequences of these external shocks. I reiterate, the solution in order for us to make sure that the productivity is growing sustainably and we have sustainable economic growth is to bring back to the target ASAP the inflation and have stable low inflation in the country. Thank you. We'll get back to you, Aram. Armen Press now. The first question pertains to the valuation of the dram. The central bank has made many statements to the effect that it is against artificial devaluation of the dram. But the Minister of Economy has come up with an opinion that they have a red line, and this red line is 450 drams per US dollars. Is there a red line, similar red line for the central bank? And if the line is crossed, will there be any actions? And the second question pertains to the deposits. What's the indicators of deposits in view of the influx of foreign visitors, foreign citizens? Do they deposit in this country or not? Thank you. Thank you. For the central bank, the exchange rate is a given restriction determined by the markets. It may fluctuate, it may devalue, it may value. We maintain the policy of floating exchange rate, which means there is no set level for the exchange rate. It doesn't exist for us. What matters for us is to ensure for our citizens low and stable inflation. Our target is inflation. The forex market, we do not have any impact. It's determined by the external demand, the forex, and the regional developments as well. We accept that as a restriction and we build our policy over that in order to bring the inflation to the target. As for your reference to the statement by the Minister of Economy, there is a follow-up to it, and we welcome the fact that they will have a special treatment of the businesses, and there will be different support mechanisms for businesses that lose because of the valuation of the exchange rate. There will be different toolkits to support these businesses, which is a policy that we genuinely welcome. We've been proponents of this throughout. As for deposits, we will share with you the numbers. Quantitative calculations are still under the accounts are still being set up by non-residents. It's not completed. There is a certain increase. As far as I understand, the question pertained to non-resident deposits, right? I will quote the numbers in fixed exchange rate for you to get an idea of the real volumes. Non-resident natural persons deposits between February and June 30 increased by 70.4%, and significant increase that is. Thank you, Civic. The first question pertains to the refinancing rate increase. Since certain experts mentioned that the valuation of the dram is determined not only by increased exports but also the increase of the refinancing rate. I would like to clarify, is there a certain estimate after this increase? Will the dram value yet more? And the second question pertains to the Armenian Association of Developers. The board members claim that the banks do not issue fixed rate dollar loans, which results in problems in striking agreements with the buyers in drums, so that a business could, for example, take a loan of 2 million at a fixed exchange rate of 450 and 2 years down the road buy back the same loan from them. They claim that it will make forex risks manageable. Is this method feasible or not? Look, we increased the exchange rate in order to bring back the inflation to the target. The transmission mechanisms of this could be varied. Nevertheless, the first impact of the rate is on the money market, then on the T-bills rates, and then inflationary expectations. The forex is a consequence of the demand and supply, and this is a policy restriction for us. Naturally, if we increase the rate to some extent to constrain the demand, if the demand is originating in the external sector, there will be impacts on the forex. If it's the internal domestic demand, then naturally not. We have submitted adequate analysis in order to be able to evaluate what would be the impact of the rate on the exchange rate. At this point, we believe it may be insignificant because our response to the rate is aiming at the general. As for the developers, I'm glad to hear that at least they raised this issue. It's been maybe over a decade that we are attempting to introduce hedging toolkits to manage future risks through, I'm using some professional terms, through derivatives. These instruments exist. You should not remember hedging when the shock has taken place already. You have to keep in mind in regular times, in normal conditions, and we're ready and willing to develop these toolkits. We had a meeting with our colleagues from the Ministry of Finance and Economy where we discussed money derivatives, foreign forex market development interventions aiming at this. When we were developing this project, we surveyed quite a lot of companies, and their response, most of them responded they were either not knowledgeable, not in the know, or not interested. For those risks for them to some extent were deemed to be fixed. Now we're learning the ropes of living in the market economy. In the market economy, it is possible to stabilize these risks. There's a price for it. This price you can pay. How does insurance work? You may fall sick, go pay over the counter, incur great expenses. You may not even be saved. More often than not, if the expenses are great, that means it's a serious disease. Or you can pay in installments in advance for insurance, get medical checkups regularly, understand the pulse of the market, figuratively adjust to the risks, manage risks, and when the shock arrives, you do not incur great expenses or your treatment takes place faster. I'm glad that this issue is raised. We're ready and willing to cooperate. We hope the business associations will join the bandwagon, and we have asked the Association of Banks to work along these lines. The initiative should come from the private sector. At this point in time, we have the best legislative regulation in the world, which allowed the EBRD, which is a 3R, which has a 3R rating, and Amundi Agba pension fund manager to conclude such a long-term swap at a very affordable, understandable price. The instruments are there, the legislative regulation is there, the precedent has already came about. It remains for the people to understand that to manage those risks, you have to incur certain expenses, not only forex risks, but also refinancing rate. So if in down the road it changes, it doesn't encumber your expenditures as a shock, rather distributing it over the years in installments, relatively making it lower. Although when you present the businesses with those expenses in good conditions, they shun it. You have to learn to incur this because the market economy demands it. You cannot afford not to incur these expenses. The shocks will continue through the future, and no single entity can absorb all of these expenses. By the end of the day, we all pay for this, either through inflation or through increased taxation. It's desirable to distribute those risks over all of us, introducing the proper toolkits in normal conditions. We're ready, not only ready for it, but we're actively promoting, advocating for this, even trying to lead the process. With your permission, Mr. Yeritsyan, I'd like to add something about the first question. You referred to an important premise that was circulated a lot, the central bank, that is, in its refinancing rate policy, itself valued the dram significantly. This was a statement already made, but the reality is just the opposite of it, and I'll tell you why. If we look at the banks, how much forex they bought off the market, if we look at the real flows, since the month of February, there's almost $650 million worth of forex bought by the banks from the real sector. This forex as a demand really arrived in Armenia, and the banks bought it up. That's for starters. Mr. Yeritsyan mentioned that since we have a significant shock of external demand, the valuation of the forex allowed us, given to diminish the impact of this international demand. In the two previous press conferences, the governor mentioned that the reality is just the opposite. Since this shock was absorbed by the forex, it allowed us to not revert to much more stringent fiscal policy. Failing the forex not constraining the prices, we should have had to take greater strides in refinancing rate. You've already observed that. So the reality is just the opposite. Since the forex valued, we did not have to increase much more the refinancing rate to constrain the inflation. Thank you, Ara. With your permission, in the wake of your last observation, this 650 million is the balance between the buy and sell? Yes. Very well. But my next question was about services. Trade and other services have increased January to May. Services almost 25% increased. In the past, you've made the assumption that sometime down the road, these expenses will get close to the resident households expenses. First, they came up with tourist behavior. Subsequently, they will switch to common resident behavior. Has this happened? And do we assume that their demand over services will slow down somewhat in the months to come, or not? At this stage, We have not made any predictions about that. Your hypothesis may or may not take place. It could be the opposite. Our citizens in revenue income may increase and they may increase their own expenditure. Depends on how this influx will behave, the amounts, the stability. We have come up with such hypotheses in the past and they still hold true. Let me add one thing to what Mr. Yeritsyan says. Yes, the trend perseveres. If we look at Mr. Yeritsyan's number, we're looking at, on a weekly basis, foreign card transactions in the Republic of Armenia in trade. As Mr. Yeritsyan said, yes, so far the activity of these transactions is there with significant, and on this chart you see the increase of services that we have reviewed for Q2 upwards, and that's the consequence. He refers to foreign issues cards used in the Republic of Armenia. There's a question over there. Mr. Yeritsyan, about the decision on the pension funds. You remember the decisions back in 2018 when the final one was taken. There were divergent opinions. Those who claimed that one should not have introduced this funded system in the Republic of Armenia, and the fund managers convened a press conference and said there's 20 more years until you retire, we'll do something, no reason to worry. In human lame terms, what these fund managers will be doing, will there be no other shocks that will jeopardize the pension? People who have been invested over years, will they as a result get what they were counting on? We have agreed, of course, that we will only answer questions about fiscal policy, but this is of major public significance, this question. I could add another question to what you were asking. We were never told it will fluctuate. They told us it will continually be growing, which is of course not true either. During the deployment of the system, we demonstrated the more stock you have, the more will be the fluctuations. But the return on when it was 1,000 drams at the creation point is 1,700 at this point in time. Over years it increased at least around 7% annually. The share increased. There were years when it increased double of that, 15, 17%. Those shares increased. They don't tell us it will be good hereafter. The fund managers, I will not make a reference to them. It's my take on this, since we supervise the whole process. And if there is any alarming issue, we would be the first to intervene. The first is the funding that we provided, the state did, they're still there. It didn't go in the red. Maybe within the last 6-7 months, the negative is so insignificant and negligible that it's not those who complain. Those who have been in the system for 7-8 years and have great accumulations, the fluctuation naturally has a greater impact on them, both positive and negative. Nevertheless, these are, if the rate goes back tomorrow, the inflation comes back, those portfolios will much faster grow because we have those shares. Let me explain it on an example. A bond, 1,000 dram or 10,000 dram bond has a 10% coupon every year. This 10%, when the rate becomes 15%, this 10% coupon should be revalued by the funds. When you go buy a bond, a common citizen doesn't revalue it. There is a term for it. You keep it until maturity, but the funds must value them daily because you have to sell it on a daily basis in order for all of us to see the real price. The 5% increase in the refinance rate, they had 10%, but could have had 15% of revenue. It's in the negative. If tomorrow the rate comes down to 10 and it's not matured, then we will have 10% over overall income, and the principal will also be. If in the meantime this 5% also adds up to that, we will have 15%. This is one factor about the existing portfolio. The principal that we all have paid and the government has paid its share, this did not go down. Over that, there is income. The income used to rapidly grow, it now slightly came back. In the future, we have great flows by new investments. For example, the exchange rate valued. If 100,000 drams in the past, we had to buy $200 in order to invest in shares. Today, the $200 against 100,000 will be 80,000. 20,000 will be invested in drum assets, high yield. Over time, the yield will be adjusted. Secondly, the new shares they buy, they will buy them at 15%. What they buy at 15%, the yield will be higher. And even if for a long period the yield of those stays low, this will balance it off. There will be as for shares, the share prices are very low. If you bought 5 shares for 100,000, you can buy 10 for the same amount tomorrow. If the market improves, you can have double the income. The global market, if you have friends, relatives abroad, you can ask them, and those cycles will be explained to you on their personal experience. That's the real story. On paper, accounting-wise, there is a certain fall in the yield, but not de facto losses. The losses may be if when you retire, if it's low, but there is guarantees adjusted by inflation, and this is a condition insured. I have been accumulating since 2014. I had I have a minus of 600,000, but I have almost about the same of income plus of plus my accumulations. In June, the reports have been published, but in July, my 500,000 minus has already improved to 400,000. It's improved. Every day, our citizens can see the revaluation of it's a revaluation. It's not a loss. The loss will take place when a person retires. I explained the course how this revaluation will get back to the positive and why the funds must do strategic investments rather than manage fluctuations and volatility. In managing the fluctuations, we would have seen the damage. If the maturity of an average security is 5 years, you retire in 10 years. 5 years down the road, if you sell them today, you will have incurred de facto losses. You will take the cash and won't be able to do the investment. So keeping is right. Let's get back to today's subject, please. Aram had a question here, with your permission, about inflationary expectations. If I understand it correctly, the last survey was done in January of 2022, and the expectations were higher than in Q4 of 21. I do not see the exact numbers in this small print, but the uncertainty of inflationary expectations, it grew from about 60% to 70% back then, and that was before the subsequent inflationary developments. So have we updated the expectations? Do we have up-to-date information about inflationary expectations? Yes, of course. It's right ahead in front of you, the graph. There is certain improvement, but that's not an improvement that would enthuse us that we have reversed or anchored the inflationary expectations. The de facto inflation should go downwards for a long period because the level is high to begin with, to be able to assume that the expectations have been de-anchored. About accounts, deposit accounts by non-residents in their dynamics. In the inflation report, let me quote, there seems to be data about there that the non-deposit accounts grew more actively in March, April. There were no estimates, but it was quite salient, about the triple, from 13,000 up to more over 33,000. On a monthly basis, it first doubles, then it becomes 50%, then 30%, and it goes down. Deposit accounts also grew, but not so strongly or rapidly. 3 to 4,000. In subsequent months, do we see a trend of non-residents making their non-deposit accounts or deposits? First, they set up accounts just to manage their assets, move from one jurisdiction to another, but then staying longer, they started to turn it into deposits. In reality, we have no news about the second part of your question. Mr. Yeritsyan mentioned that the process is still unfolding. The growth rate has decreased of setting up accounts, but in any case, yes, what you're saying is true up to this point. The numbers I mentioned, if you look at them at the fixed exchange rate, 70.4% of increase in the non-resident deposits. Most of it is demand deposit, not time deposit. So it's not, there is an increase in time deposits by natural persons, non-resident natural persons, but the significant growth has taken place in the demand deposits. Why is it high? Because the base is essentially much lower initially. It increased initially faster because the baseline was lower than the time deposits. The growth, we may claim that continues, but your hypothesis that the amounts have been invested, you do not always invest it in deposits. You invest in real estate or business initiatives. Those investments go there as well, and this is up to the statistics to capture. Thank you. If there are no other questions. Cashing out foreign currency, commercial banks collect commission 3 to 4%. How long will this continue? I think it's up to August 31. Will this be extended, this deadline? Where is this deadline mentioned? The banks have made a statement that by August 31. Maybe there is a confusion somewhere here, but what I'm interested in is, did it impact the remittances? If you have data about this, please share it. Is it possible that this commission rate also grows down the road? The commission is determined by the market. If there is a demand for such transactions, the demand is high, and there is a certain restriction that applies to cash dollars. The restriction has always been there, but in view of the sanctions, it has become more acute. Apart from that, I would like to also emphasize that cash is expensive. When the demand is low, the banks may ignore it. But when the demand significantly increases, those expenditures rise for the banks, and they have to be transferred to whoever makes the transaction, which is why it's desirable for the transactions to be cashless. Non-cash means are quite affordable and more comfortable in order to make business transactions. That's the way to go. The whole world is trying to restrict cash. All countries, including the United States, that are the suppliers of cash dollars to the rest of the world, by their demand, their regulation, determining standards about international banks, they try to make cash more expensive, or even for second or third countries. So it's not surprising this 3% This is the price that the cash that the banks pay for servicing the cash. Whether it will increase or decrease depends on the subsequent demand. It's like any goods. If there is a big demand and you can't supply enough, the price regulates it. Whoever pays more gets the cash. Unfortunately, there is no good solution for this. The best solution is to take advantage of financial instruments, non-cash transaction, receive, pay. It will reduce for the banks the AMLTF expenditures. They will be able to offer broader products and services to the citizens, filling up the growth of the demand is not just an Armenian factor. In global uncertainty, the demand for cash dollars naturally increases. If we compare it with other countries, everywhere the cashing out becomes more expensive under the impact of market factors. Why markets? Because there was this thesis in circulation that it's the central bank that increased the cashing out costs for the banks. That is not the case. The price of the cash has increased generally, and the banks, just following simple demand supply logic, have increased their price. Which is why I was surprised when you said someone had set the commission. Thank you. Do you have any information about neighboring countries, inflation in the neighboring countries? Is it the lowest in Armenia or not? At this point in time, we may claim yes. We had a chart about various partner countries. Yes, regionally, our inflation was the lowest, the rates were the lowest, and we had quite significant high economic growth. Thank you. Aram has another question. Uh, there is an issue here. They compare us with Georgia, claiming the growth is higher there, notwithstanding the high inflation. The economic growth in Armenia, we increase the refinancing rate. You sacrifice economic growth. Look at Georgia, for example. We have to underline, emphasize one fact that in Republic of Armenia, the rate is lower than in Georgia. The growth is higher there, but our growth is also higher, and the refinancing rate is lower. We, given a lower refinancing rate, got lower inflation and a high growth rate. The rate does not constrain. In Georgia, they had higher refinancing rate. They should have restrained economic growth. They had simply higher demand externally. We had what we had, although it was in the double digits, our economic growth nonetheless. A small adjustment in this inflation report. Your estimate was, all other things equal, the valuation of the dram would have absorbed 1.2% base points of the inflation. This pertain to the point in time as of the end of Q1, the exchange rate, and if dram values further, will this absorption effect be more pronounced, and if it devalues, will it fall? Look, both yes and no. Most probably yes, but I would like to reiterate the forex and the foreign currency markets are outside of the scope of impact of the central bank. This is our policy restriction given, and if there is a big supply shock and influx of foreign currency, to some extent the adjustments have to be made by the market, to some other extent by our policy. And Hayek reiterated the same thesis about 1.2% of the absorption impact. This assumption has not changed in view of the de facto developments. As to what would be the future developments in the forex, there could be fluctuations both ways. It could value devalue. Accordingly, we will do our interventions based on our mandate of getting back to the inflation target, which is what is our task that we have to take care of for our society. The impacts may change, depends on the magnitude of the shock. If the shock is great, the impact will be great. If the shock is smaller, naturally the impact will be lower. We have evaluated the transmission between 0.2 to 0.5% of an impact, if that tells you something, in the event of 1% of fluctuation. In view of what Mr. Rubekan and Mr. Yeritsyan just said, in the inflation report that you referred to, this has been discussed, if you were paying attention, under the conditions of the economic shock, on the background of international visitors, external demand. Like Mr. Yeritsyan said, during the shocks, the expressions could be differing. Mr. Rubekan just mentioned a while ago, concurrently there is an increase of external demand, which, irrespective of everything else, other things equal, is an inflationary phenomenon. Concurrently with that, since it's an external demand, it's a demand by our international visitors. Concurrently with that, there is a valuation taking place. They have to convert the foreign currency to cater to this demand. It's this context that we're referring to. We cannot get this discussion outside of this context. Various shocks, various impacts, various circumstances may result in various fiscal responses. One thing we can assure is that it is welcome that you are persistently perusing the inflation report and hold us accountable vis-a-vis our previous statements. It's quite a welcome. Very seldom do we encounter such a level of professional discussion. Our biggest pledge is that in all of these reports we will describe at great length also the changes vis-a-vis the previous reports and the impacts of the change. Either in a standalone analysis or in the same reports, we will cover all that. This was an important signal for us to be more meticulous, persistent over these issues, since we're being read, which is very good. Since you also referred to hedging, do you believe that the banks and financial institutions are ready to offer good tariffs for such services in view of the uncertainty being too high? The more the uncertainty, the higher the pricing. For those toolkits, the economy of scale works. There has to be a certain amount of interest for it to kickstart. The precedent that I referred to is quite affordable. The EBRD and Amundi Agba concluded this agreement. I believe if such a price could make long-term swaps accessible for our businesses, that would be deemed quite affordable. I cannot disclose the commercial secret here, but the opportunity is there. De facto, the instrument is there, it delivers, and the banks can do it. There must be a demand for it. The business must, in its balance, include in its expenditures the hedging expenses. The moment they assume, as soon as I take responsibility for my health, buy out an insurance, from that moment on time the price is set. If I never tried, how do I know what the price? Usually they do it sporadically for just one transaction, or if the crisis hits, everything is told, the commodities in Russia, they think this would have been nice to have had in advance. you can't address and resolve those issues while the shock is impacting you. It has to be done in advance in normal conditions. Those risks are manageable, and I think our market has enough knowledge, and I just provided you with the proof for this to deliver normally. It may take some time. Maybe what we're discussing now may address even more issues when it comes to practical implementation, but it's doing the ropes of it is much more pleasurable than to theoretically discuss our inability to manage those risks. I think we've exhausted all the questions. Thank you very much.